Morning. Welcome to Fluid Talk. I'm Chris Cochran, founder and CEO of Fluid. And sorry, I just got an error notification. Is everything all right there, guys? Am I coming through?
Yep. We can hear you, Chris.
Okay. Good. So let's start again. Morning. I'm Chris Cochran, founder and CEO of Fluid, and your host for today's session. Today marks episode 4 of Fluid Talk, and I'm pleased to be joined by our guests from Graphene Economics. For those new to the format, Fluid Talk is a podcast style platform built for tax and finance professionals and is followed by a growing community of several hundred industry leaders and practitioners. Before we get into the discussions, I'd like to introduce our speakers. Michael, let's start with you. You work with multinational groups on transfer pricing, strategy, operational implementation, controversy management, and governance. From your perspective, what is one big theme that makes this discussion especially relevant right now?
Good morning, Chris, and good morning to everyone who's joining us today. I've been really looking forward to this discussion because I've had a few instances where CFOs have started asking tax directors, what are you doing to automate your tax processes? And the same question applies to transfer pricing processes. So I'm really looking forward to sharing some thoughts and discussing how this can play out in the area of transfer pricing.
April, you and I have both spent time in the trenches and large multinational data projects. And I think we've seen how quickly a tax question becomes a data question. From your perspective, what's the practical challenge that clients are facing at the moment?
Thank you, Chris, and good morning to everybody. I mirror Michael's excitement. I'm very happy to be here, and it's great to finally be collaborating with you, Chris, on this platform. So yeah, very excited about it. I think one of the challenges that multinationals are facing and the hurdle at the moment is that what we can see in the environment is there's very much a shift. That's what kind of happened over the past few years. So in the past, there was a very strong focus towards compliance and getting your documentation and your returns and all of that submitted on time. But there's been a very sharp focus lately on the data demands on taxpayers and how do you collate and interpret your data and submit it to your revenue authorities in a timely manner, or even for the business to meet your business demands and to better understand the analytics of your data. So yes, very keen to be unpacking data automation and how that all fits into transfer pricing in the session today.
Excellent, excellent. So before we get into the discussion, two quick things. One is we do have a webinar chat. So if you've got any questions, please pop them in the chat and we'll get to them at a point in time in the webinar. The other is I want to quickly introduce Fluid for those of you who aren't familiar with us. Fluid builds software for tax and finance teams dealing with complex global compliance processes. We use automation, data structuring, and AI-enabled workflows to help multinational teams manage those processes more consistently and with better control. That's why today's topic is so relevant to us and excites me. Transfer pricing is no longer only about having the right policy or documentation. It's increasingly about whether an organization can operationalize that policy, evidence it, and defend it under pressure. So I spent quite a bit of time going through the graphene research that we'll be diving into today. And for me, there are a few big takeaways that really frame today's discussion. The environment has changed. This isn't just business as usual. Governments are under pressure to raise revenue. Revenue authorities are becoming more technically capable. Multinational business models are changing. Information sharing between authorities is increasing, and technology is moving incredibly fast. All of this lands on the desk of the transfer pricing manager. That person has to keep multiple stakeholders comfortable: tax authorities, finance teams, local entities, the board, and audit committees. Michael, is this just normal background noise, or are we seeing a real shift in the transfer pricing environment?
Chris, from what we're seeing on the ground and through our research, it is definitely a structural change. Let me give you a quick example. Before COVID, whenever there was an engagement with a revenue authority, it generally happened in person. We had a number of cases where, I was sitting in the tax courts in person in Tanzania, for example, or meeting with other revenue authorities. Nowadays, with the way things have changed, this year alone, our team has had 6 different countries where we have met with revenue authorities virtually. So just the way of doing business, as one example, has changed fundamentally from the way it was a few years ago. But mirrored with that, now there's a lot more information, a lot more expectation on the transfer pricing teams at our clients, which has been a fundamental shift and is not likely to go back.
Thanks, Michael. So, I mean, there's clearly mounting pressure on transfer pricing professionals. What do you see the actual implication for transfer pricing professionals in large multinational enterprises?
Well, Chris, I think there's one key word in that last sentence of yours, which is pressure. And we're seeing it for our clients. There is a tremendous amount of pressure because there is an expectation and a requirement that our clients must keep their fingers on the pulse in every different area. So you'll take something like the fuel price, which is impacting us all personally. But the fuel price impacts, and a big significant increase in fuel impacts different entities for our clients differently, depending on whether the regulations and how they're being applied, are there concessions being given in those countries. So it plays out differently. Now, it means that the transfer pricing director needs to identify and understand the factors impacting each entity, how they're impacting it, but also then needs to see what impact is that having on profits, and how is that translating into the transfer pricing compliance and documentation. So that is the challenge that individuals are facing within our clients.
Yeah, so that takes transfer pricing out of the purely technical space and into the reality of how business operates. April, where do you see technology genuinely helping, and where does human judgment still matter?
Well, Chris, so I mean, currently at the moment we're sitting in May 2026, and all of us now are all aware of the LLMs that are out there. So your co-pilots, your chat GPTs, your Geminis, etc. And with that, what you can do is you can take a very sharp, young, smart individual that can put in a couple of prompts, and from there spit out what they might be able to expect or find in a transfer pricing environment around what prices should be charged or what arguments could be advanced. But with that, and as the call out mentions on the slides, that although technology can accelerate parts of the process, it can't replace the underlying economic thinking that sits behind a defensible transfer pricing position. So it's very important to bear in mind that, yes, while technology can very much be an accelerator to the process, you still need to make sure that you've got your safeguards and your structures in place, and have the economic thinking and the structural thinking in place to ensure that your technology is acting as an enabler and not something that will potentially trip you up later down the process.
Yeah, I get it. So, I mean, from a fluid perspective, we see this all the time. Technology is very powerful when the process is clear and the data is structured. But if the logic is unclear or the underlying data is fragmented, technology can just help you get to a bad answer quicker. So the real opportunity is combining Graphene's economic and transfer pricing judgment with a structured operating data environment. So, Michael, let's talk about the Graphene Economics 2025 annual transfer pricing report. What was the purpose of the research? Who responded, and why should people pay attention to the findings?
Chris, we work with clients in more than 30 different countries on their transfer pricing compliance and different aspects of their business. We've been noticing various shifts taking place over time, but we wanted to really stress test our understanding of the environment. So what we've been doing at the end of each year for the last 5 years is running transfer pricing surveys. These are pitched towards revenue authorities and taxpayers. And this last survey that we ran late last year, there were 51 respondents. They were from 9 different countries. and many of them had 10 or more years of transfer pricing experience. And what this did was this enabled us to stress test our understanding of the shifts that have been taking place, but also to get better understanding of the observations that we've been seeing in order to formulate our view of the direction that we need to help our clients move in going forward.
Yes, I mean, what gives the report real weight for me is that it isn't based on theory alone. It brings together insights from people who are close to the issue, industry leaders, tax professionals, and multinational teams who are dealing with these pressures in practice. So the findings are useful because they reflect what's happening on the ground, not just what's being discussed in policy circles. So some of the individual pressures that have come out in the research aren't entirely new on their own, but the way they converging to me is new. Before we go into each theme, I want to frame the takeaways at a high level. We'll talk about the shift from rules to real operations, the growing data bottleneck, the fact that authorities increasingly have the data advantage, the normalization of disputes, the difficulty of getting certainty through mechanisms like APAs, and the rise of AI and automation. For me, the important point is that these aren't separate issues, they reinforce each other. Weak data makes monitoring harder. Poor monitoring makes disputes harder to manage. And if authorities are using better tools, taxpayers need stronger operating models of their own. So, as we go through these themes, I'm going to keep coming back to that idea. These aren't isolated trends, they're compounding pressures. So, let's start with the shift from rules to operations. The first theme really resonates with me because it's where tax theory meets the business. A transfer pricing policy may say one thing, but the real question is, can the organization show how that policy is actually applied? Michael, when you sit with clients, what does this shift from rules to operations look like in practice?
Chris, audits used to focus on what transfer pricing method are you using? What marker are you applying? But more and more, what we're seeing is there's a request for a huge amount of information in order to enable the Revenue Authority to formulate their own view of the nature of the transaction. Now, what our survey showed and the responses indicated that the transactions that are topmost on the thoughts and agendas of our clients are services and increasingly IP-related transactions. But again, it comes to understanding what's really happening on the ground in those transactions. Take the PepsiCo case in Australia, for example. There it was a case of a company importing products, but the Revenue Authority really interrogating this to say, well, you're characterizing it a certain way, but is there perhaps embedded IP included in this? And the taxpayer needed to provide lots of information in order to defend the true nature of the transaction. We're finding that more and more and more. Questions being asked about what is really happening, why was the decision being taken, and how do you support the choices and decisions and the pricing that you actually implemented.
Yeah, very interesting. I mean, one example from our side when it comes to operations is intercompany allocations we've seen. On paper, the principle can look straightforward, but when you actually get into the data, you need to understand the allocation keys, the source systems, the operational drivers, and whether calculations are being applied consistently. With a large South American travel group we worked with, a key part of the challenge was replicating their intercompany allocation calculations. We were able to do that in just 2 weeks, but what made it possible was we didn't try to reinvent the wheel. We got properly into the operational data and understood the mechanics behind the calculation and brought that into our toolkit. Michael, that's the point I keep coming back to. Operational transfer pricing isn't just about producing an output. It's about understanding what's really happening in the business, factoring that into your models and being able to prove it. Once you start getting to the real mechanics of the business, the next issue shows up pretty quickly, the data. And that's the second theme, that data has become the bottleneck. April, you shared a powerful example in our prep discussion of a client that received 11 information requests during a single transfer pricing audit. What happens when an audit runs over a long period and the taxpayer has to keep going back to that historic data?
Yes, yeah, you're 100% correct, Chris. So, yeah, a couple of years ago, we were dealing with the transfer pricing audit that spanned over about 5 different financial periods. And over the course of the audit, as you mentioned, there were 11 different information requests that came from it. So what the taxpayer had to deal with at that point in time was firstly the considerable amounts of time and resources to allocate in order to collate and pull through the data. The difficulty in obtaining historical data. When we were also chatting in our prep session, you also made the anecdotes about, well, try and find your cell phone bill from 2 years ago, right? So trying to go and find that information somewhere on a share drive, teams might have changed, data systems might have changed. Now you have to go and try and pull invoices or general ledger records or emails or KPIs for something that happened 7+ years ago, potentially, depending on the scope of the audit. And the other massive headache is also checking the consistency of the data, right? So what you've submitted to a tax authority in information request 1 and 2, is that aligned with what you've now submitted in information request 10 or 11? And how does the information talk to each other?
I mean, sorry to interrupt, but that's exactly where inconsistencies creep in, right? If the audit runs for months or years, people leave, systems change, folders move, and the business is still expected to provide a consistent story to the revenue authority. I mean, from a fluid perspective, we often see the same pattern. The old process involves people copying and pasting data across multiple spreadsheets. I mean, in one case, we had 7 spreadsheets where it started with a pivot table, copied and pasted because the Excel sheet just couldn't handle the amount of data that was put into it. And then trying to reconcile all those results at the end. The problem with that is that errors are often only found late in the process and when everyone is already under pressure. In our solution design, we catch those issues much earlier. For example, identifying orphan data entries on ingestion rather than discovering them later when the calculation or report doesn't reconcile. So, April, I imagine this is where taxpayers get exposed, not necessarily because they don't have the data, but because they can't reproduce it consistently, quickly, and with confidence. If the data foundation is weak, everything downstream becomes harder. I mean, the calculation, the review, the documentation, and the audit response.
Yes, definitely. And, I think that, with our little image in the beginning where you have your tax manager sitting in between all of this. So on the one hand, you need to have your data consistency to, support your position to a revenue authority. At the same time, you need to have the data and enable to interpret it, understand it, and provide the feedback to business, as well as still meet your compliance obligations. And what we've also been seeing is the sheer increase on the compliance burden on taxpayers. So now you've got country by country reporting, you've got pillar 2, you need to prepare and collate information across multiple ERPs, different trial balances, different business units, and it really is a massive struggle for taxpayers to deal with all of those without having a strong data automation system in place.
I think that leads nicely into the next point, because if the taxpayer is struggling with its own data, all of these outputs are being submitted to the revenue authorities, right? And they're building stronger and stronger analytical capability. Michael, that's the asymmetry that worries me. Tax authorities are getting better access to information. They've got your Pillar 2, your CBCR, perhaps your CFC, some transfer pricing results. You've described this to me as one of the points that really gets your attention. Why is that?
100%, Chris. Let's get a bit of an audience engagement and participation. Give me a thumbs up if you are currently dealing with a transfer pricing audit. The chances are those who are dealing with transfer pricing audits, they've for the period 2019 to 2022, maybe a bit later. But at the time when you would have submitted your tax return and your TP documentation for those years, you would not have heard of ChatGPT. Likewise, me neither. However, revenue authorities sitting now in 2026 are using and have access to AI systems to upload your TP documentation, upload financial statements, upload integrated reports, do a competitor analysis, and ask for a summary of the risk facing this taxpayer from a transfer pricing perspective. But the interesting thing for me, Chris, it's not only the use of technology by revenue authorities that's putting pressure on our clients. Sometimes it's coming from closer to home. We had a case recently where a CFO spent quite a bit of time on ChatGPT, and they put together a business plan for a restructuring of part of their business. And they then sent it through to the tax manager and to ourselves saying, is this okay? Any risks with this? Have a quick look. By the time we got to page 35, we realized that, and we saw some of the references to ChatGPT, and our thoughts were confirmed. What this means,
It sounds like our government's
technology
recent AI policy, right?
it does, rather, absolutely. But you know
Yeah.
what it's doing is it means that people are asking questions. They have access to knowledge and insight, and they're asking a lot more questions, both from internally in the organization and externally. A lot more questions being asked of the tax team on their transactions and their transfer pricing models.
Yeah. So, I mean, if we look at the tax authority, they're now able to look across years, filings, taxes, different types of taxes, and different information sources. And meanwhile, taxpayers may be sitting there just trying to figure out which spreadsheet's actually the final one that was submitted, right? So there is a definite asymmetry there. You mentioned a scenario in our prep where a revenue authority compared the related party disclosure in the annual financial statements to what had been submitted in the tax return. There was an error in the AFS, and the authority escalated it as potential fraud. That's exactly the kind of issue that worries me from a data perspective. Maybe just tell us a little bit more about that.
Yeah, exactly. I mean, it was supposed to be a transfer pricing audit, but now there was an allegation of fraud because the related party values for the transaction were different to the values used in the tax return, and those values in the tax return were the same values used in the transfer pricing documentation. So the Revenue Authority said things are not tying up. Now, the reality is, very often the related party note, it's a bit of an afterthought in the preparation of financials. I can't tell you the number of times we've encountered cases where related party notes are not the final values for the particular transactions, or they don't tie up. So what it means is a transfer pricing matter got completely derailed because of information and data that was used in a different source.
Yeah. So, I mean, it starts as a disclosure error, but once different filings don't line up, the taxpayer is suddenly explaining credibility, not just numbers, right? I mean,
100%.
and this type of data intensity and volume, it means more frequent and more detailed data collection for the taxpayer. As audit processes become more data-driven, tax teams are tasked for more supporting information more often and at a more granular level. So we see that in broader tax data projects as well. But let's get on to the next theme. Sorry, I got a bit stuck on the data there. Disputes are becoming more routine, and April, you've seen this. Like the mindset changes completely. If an audit is once off, you can pause everything and deal with it. But if audits and requests become part of the normal cycle, the organization needs a system to be able to cater for this. I mean, in our prep, you mentioned an East African client where one transfer pricing audit wrapped up and almost immediately another one followed. That really brings this point to life. Tell me more about your experience there.
Sure. Thanks, Chris. Yes, and that's exactly on point. So we were dealing with assisting a client in wrapping up an audit that covered a number of years in scope. We were submitting the last bit of information that was requested, closing out with discussions with revenue authorities. And as that audit was coming to conclusion, the client half jokingly said to us, "Oh, well, we can expect, when is the next one going to come in?" And lo and behold, a few weeks later, in the inbox, there arrived the audit notification letter for the next 3-year cycle. And we're seeing that increasingly across Africa. I think, given all of the uncertainty, all of the upheaval at the moment in the larger macroeconomic environment, that is putting pressure on, the resources and the revenue collection with the revenue authority. So they are looking for different mechanisms to collect tax and transfer pricing, and the disputes that arise out of that. The revenue authorities are seeing that as quite a big ticket item.
Yeah, we've seen, I mean, when it comes to like repetition and of processes. We've seen something similar in adjacent tax compliance processes. In one case, we had a client who runs a annual compliance collection process that used to take them about 4 months. We got that down to 1 month, but now they need to collect similar data at a different time in the year for audit process, right? And the audit data, we managed to collect that in 3 weeks and mapped it using previous compliance mappings. So that created much more confidence in the outcome because the team was not starting from scratch. I mean, if they've had to run these two processes as they used to, they would have had 2 4-month processes running in their operations. So I think that's why dispute readiness isn't just about having documentation. It's about being able to respond without rebuilding the whole evidence base every time. And if disputes are becoming more routine, the obvious next question is how companies create more certainty. So there are options like APAs that can help to create more certainty. Michael, SARS recently released an update on APA. So there's clearly movement in South Africa around the space. An APA can, in theory, make transfer pricing simpler because it gives the taxpayer and authority a more agreed framework on front. But I guess the challenge is that APAs aren't easy to access. They're process constraints, capacity constraints, and in some cases, very high qualification thresholds. At a high level, how should taxpayers be thinking about this?
Certainty really is the goal that many boards and executives have for the tax department and tax teams. I had a discussion last week with a head of tax of a very large global listed company. And I asked her, what's her biggest challenge in her role? And she said, well, not knowing where the next audit is coming from. And that sentiment is reflected in conversations I've had with other clients. So certainty is this goal, this big objective. APA is intended to achieve that. But as you say, the South African APA pilot program, the threshold is so high that it's not going to be available to most companies. In other countries like Morocco, Tanzania, Kenya, Nigeria, where there are regulations allowing for APAs, the take-up has been extremely limited. So what it means is we are left in this environment of considerable uncertainty, and we need to adjust the way we're doing things to better navigate times of uncertainty.
Yeah. So if external certainty is difficult to access, the company still needs to create as much internal certainty as possible, right? I mean, even where a taxpayer can't get certainty from an authority up front, it can still prove its position internally, right? Through clear ownership, better data, better monitoring, and better evidence. That's where I think the operating model becomes a kind of internal certainty mechanism, and we'll get into that in a little bit more detail. Let's move to the final theme, which is AI and AI adoption. I want to spend a bit more time here because I think we're moving from the experimentation phase of AI into the industrialization of AI. By that, I mean organizations are moving beyond isolated use cases and individual productivity tools. The real opportunity is embedding AI into government, repeatable workflows that operate at scale. So, in a transfer pricing context, that means using AI-enabled processes to support data ingestion, data validation, transaction mapping, perhaps anomaly detection, workflow routing, evidence preparation, review processes, and ongoing monitoring. All the kind of like real core operational groundwork. It's not about asking a tool for a transfer pricing answer. It's about building AI into the machinery of the process so that the organization can collect data once, validate it early, reuse it across compliance and audit needs, and give people faster access to the evidence behind the numbers. April, I mean, from a transfer pricing perspective, where do you think technology can genuinely help, and where does economic judgment still need to lead?
Thanks, Chris. I mean, I really so much like the old cliche of, the analogy of rubbish in, rubbish out, right? So I think the first thing with acknowledging AI, and as you very aptly put, like it's a tool and an accelerator to enable success in the business, but it can't be the primary thinking mechanism. It can't take away the structuring aspect of it. It can't take away the element of considering that you have a sound transfer pricing operating model set up in your business that's sustainable and that meets the various compliance and business requirements across various multinationals. So where it is powerful, I think, is, it's understanding what are the benefits of it. And as you were mentioning, the data validation, the repeating of the tasks, the analyzing, the validating of the data. And where you and I have worked quite closely together, we've seen that's been a very powerful tool where we've had to ingest large amounts of reporting information for clients that have over 200-300 entities. You can't obviously sense check every single data input, but you have checks against, comparing it against the financial statements and getting the AI to basically pull out the variances or the anomalies that the individual teams that can then go and investigate and explain if need be, if an anomaly does make actual sense. And you can build then a robust defense file for a revenue authority who would also be looking and interrogating data in a similar manner.
Yeah, so I get it. I think that distinction is critical though, because technology can help you move faster, but it doesn't remove the need to understand the business, right? Test the logic and have experts apply economic judgments. That's why I think the winners won't be the teams that experiment with AI casually. The winners will be the teams that industrialize it responsibly, inside clear processes with good data, good governance, and then having human judgment where it really matters. So before we move into the recommendations and the operating model, we'd like to hear from everyone joining us. The question is, which of the following transfer pricing priorities are currently receiving the greatest focus within your organization? There should be a poll popping up on your screen shortly, and if you can just rank them in order of priority, with 1 being the highest priority and 5 being the lowest. If you can't see all 5 numbers, just expand the screen, just put it into full screen and you'll be able to see them there. It can be a little bit narrow when it first pops up. So as you answer that, I think about what we've covered: operational execution, data quality, audit readiness, certainty, technology, and internal governance. We'll leave the poll open for a moment while we move into the recommendations, and then we'll come back to the results once you've had some time to answer. So, Michael and April, you guys have done an excellent job of really distilling a very complex and fast-changing transfer pricing landscape into a set of clear strategic recommendations. But the real challenge for most organizations is moving beyond the insight to operationalizing it. So I guess the question is, how do you move from recommendations and policy into something that actually works inside the business across data, workflow, governance, execution, and evidence? So Fluid and Graphene have worked closely to solve this challenge with what we call the transfer pricing operating model, which will be the focus of the remainder of the session. But before we dive into that, let's bring up the poll results quickly and see what they tell us. Interesting. So I see there's a big lean towards transfer pricing, disputes and controversy management, AI adoption. Yeah, so I mean, so that the poll results are useful because I think that they point to a broader issue, is that there's not one isolated problem, right? It's an operating model problem. For me, this is where the transfer pricing operating model becomes the so what of the conversation. Michael, Graphene brings the transfer pricing expertise, the rules, the economics, the controversy experience, and the understanding of how revenue authorities think. At Fluid, we come at it from the data and process side: how to structure fragmented information, automate repeatable workflows, identify data issues early, and make information easier to review and reuse. So, I mean, through our joint experience, we've seen that companies don't only need another year-end report. They need a proactive transfer pricing operating model. How do these two perspectives come together in the model, and how do the 4 capabilities fit together?
Chris, it's not just a one-dimensional change that is required. I remember when I was young, my grandfather spent a lot of time with me, showing me his camera. He had a nice camera and teaching me about different settings on cameras and teaching me about the different film qualities. You might remember the 100 film, the 400 film, the 800 film. And I got familiar with that. But after a while, there was this change, this migration to digitalized cameras. And a company that didn't change was Kodak. Kodak stayed focused on the print reels when what was required was a fundamental change, not just in the substance of the material, but the way they do things, the way they engage with customers, etc. I genuinely believe what we need to address all of these factors that we're talking about is a shift in the way that we look at transfer pricing. So we've spoken about these six forces that are reshaping the transfer pricing environment, leading to a structural change in what we're seeing. What this necessitates is a shift from a reactive approach to transfer pricing, where we've been looking for many years at the documentation for the prior year, supporting an audit or addressing an audit as and when the audit comes up. We need to move to a proactive scenario where we are anticipating audits, where we are looking in the current year, not the previous year, the current year, what the transaction results are looking like, and anticipating what might come. So that's the response that's required. It's for this reason that I'm really excited about this collaboration with Fluid, because it's enabling us to be able to look at the data and automating on the data and double up on top of that with the analytics and the insights for transfer pricing purposes to help guide clients into a proactive world. So there are these four capabilities that we genuinely believe are required to enable our clients to be more agile in handling their transfer pricing matters. The first deals with governance and policy stewardship. Transfer pricing touches many different parts of the business across multiple different countries. It's not okay just for a centralized team to be handling everything. We need the FD in country signing off on any changes to the pricing, signing off on the transfer pricing compliance documentation, being informed to make certain decisions. But we need the centralized team having data, having visibility, being able to track and monitor consistency across the group. Data foundation and traceability, really important. We gave the example of the related party notes, but we can't have mismatches between related party notes, tax returns, intercompany agreements. Things all need to tie up, and that must start from a very granular level and be built up. At the same time, where we spoke about how key stakeholders are expecting answers in a much shorter period of time, they've also got access to AI type systems, and they're asking more pertinent questions and wanting answers much quicker. So clients need to be on top of the data, need to be equipped to be able to see what a change in pricing will do on the profitability of different entities, not in the past year, but in the current year, to make informed decisions. This all needs to tie up with evidence and support, because at the end of the day, the Revenue Authority auditor is going to say, show me. Show me why you did this. Show me the proof that this really happened. So how do you tie up the show me with the underlying data? How do you get the right people making decisions across the organization? So it's these four capabilities that need to move forward. Now, we see some companies really doing a great job in one or more of these categories, but it's important to have a plan from a transfer pricing point of view to move all four of them forward.
I think that's a really important point, Michael. Sorry to interrupt you. But I think that's a really important point, because I mean, governance, data, monitoring, and evidence, they can't be treated separately, right? I mean, if your governance is strong, but the data is poor, the model breaks. If the data exists, but there's no monitoring, the business only sees issues after year end. If evidence isn't captured as part of the process, then audit response becomes painful. And that naturally takes us to the data foundation that underpins the operational model, right? The operating model only works if the underlying tax data can be collected, structured, validated, and reused across different tax and compliance needs. I mean, how do you see those four kind of like coming together and working together in this model?
Well, I think agility for me is so important because, and you need this, you need a broader process, not just looking at your TP documentation, for example, you need a broader process. What we often find is that when a revenue authority audit starts, the focus suddenly becomes on that revenue authority audit. But then you've got the backlog and buildup of compliance documentation, or there's a restructuring taking place, and the focus now needs to focus on this. But then there's added pressure when there's suddenly 2 or 3 audits. Or what happens in a terrible scenario, something happens to a key member of the team or they leave. Now, maybe your team was just holding it together, but now you've got the significant pressure. We need to try to reduce the pressure to equip teams to be able to handle all of this. So it's really important to bring all of these together to share responsibility, because the transfer pricing team should not be taking decisions on certain things that the in-country FD should be taking decisions on. And that's what
Yeah,
in-country
and I
revenue
think
authorities are wanting to see. So this model must work together.
Yeah, and I think without this type of model, things often get very siloed, right? I mean, at Fluid, one of the things we've learned is that tax teams are often collecting similar data repeatedly for different purposes, right? So one team's collecting information for transfer pricing, another for CBCR and Pillar 2, another for CFC, another for audit responses and internal reporting. And it's all very similar data or the same data, right? And it's being extracted and collected and processed every single time. And if each process has its own spreadsheet, its own data request and its own reconciliation, the burden keeps multiplying. So I think that's where our idea of the tax data lake is to create a structured tax intelligence layer, one place where scattered data can be ingested, validated, mapped, and reused across different compliance and analytical needs. And I think that's part of my excitement of working with Graphene is that we're able to bring all this information together, and you guys have got the expertise and the analytical know-how to be able to actually extract real business value out of that data.
And I think that the data, as you say, Chris, the data is there. So by empowering our teams, that's what really excites me, empowering clients. And the thought of empowering clients to make really good decisions beyond just transfer pricing is a really cool idea.
Fantastic. So, look, as the practical next step, Fluid and Graphene are offering a focused transfer pricing operating model accelerator. It's quite a mouthful, so I'll call it the TP Ops Model Accelerator from now on. It requires only 2 hours of your team's time with targeted pre and post work completed by our teams to keep the session highly practical and outcome driven. And what the output is, it's a high level solution design for one priority TP use case within your organization and practical next steps towards the execution thereof. So to make that practical, we're going to open a short poll now for anyone who would value a follow-up TP Ops model accelerator session. Or if you don't feel like you're ready for that just yet, perhaps a personalized TP platform demonstration to just be able to see what the capabilities are and what you can achieve for your future planning. So the poll will stay up there for a while. Please answer as you'd see fit. So, but as we close out today's session, I'd like to invite you to join us for the second part of this series. So, transfer pricing operational enablement. Today, we explored the changing TP landscape and the growing need for more operational, data-driven TP models. In episode 2, we'll focus on how organizations operationalize this in practice through structured data, codified rules, workflow, automation, monitoring, etc. So we'll unpack how TP data and policy can be transformed into intelligence and action, enabling all these aspects that we've kind of spoken about. So we'd love to have you join us again. That will be on Thursday, the 11th of June at same time, 11 a.m. But Michael, April, Thank you so much. It's been a really practical discussion. For me, the big takeaway today is that transfer pricing is no longer something that can just sit in a year-end documentation process or kind of like have a tick box to say, well, we've got that agreement done. Like the pressure is now operational. The data needs to be structured. Um, Monitoring needs to happen earlier, and the business needs to be able to explain what's really happening around the numbers. Um, Before I close out the session, are there any, perhaps there's some questions. Have there been any questions that have been popped into the chat? I haven't had a look. No, we haven't got any questions yet. Michael, have you got any closing remarks while we see if anyone's going to pop us a question?
Chris, this is interesting times, and without overstating or dramatizing, the change, I genuinely believe, from the examples that we've shared, we are seeing things change, and it's a time, it's not a one size fits all approach for all companies. It's about figuring out what is the right approach for every company. But what I genuinely believe is every company needs to do something to share the load, to help make it easier and make it more sustainable from gathering the data, understanding the touch points of across the business. So what's really impacting the business? I love having conversations through our processes with our clients in country and understanding what really happened in your country, what impacted the business in your country. And if I speak to, to 10 different entities across a group, chances are there'll be something. But then trying to see in terms of process, how do we structure, how do we simplify, how do we make things a bit more consistent so that we can have a more consistent result. So I'm very excited about this journey, to be going on it with yourselves and with clients as well as we navigate this change in times.
Excellent. Thank you, Michael. April, thank you so much. Yeah, I mean, any final remarks from you?
So what really stood out for me, Chris, was the poll response that a number of our viewers voted on, right? And when they mentioned what was the biggest headache that they're dealing with at this point in time, and it's transfer pricing disputes, right? So there's operational transfer pricing that is top of mind, but and AI, there is some focus on that, but it's definitely the defense ready approach. And how do you navigate that, where we spoke about disputes becoming more and more routine, where you need to at the same time focus on your day-to-day compliance requirements, but then it's not just a case of you submitting your TP document, throwing it over the fence to the revenue authorities and say, there you go. It's now defending the position. And even though taxpayers, with the multinationals we deal with, they are very risk adverse. They do not have, very aggressive transfer pricing positions that they put up, or tax structuring positions. They do try to do everything, right and correct and by the letter of the law. But, they're still faced with these various, pull factors, and revenue authorities still wanting additional revenue collection, still interrogating the transfer pricing model. So yeah, it really is a struggle, and it's a headache, and the complexities around managing your data, it really all feeds into that. So yeah, it's been a very interesting discussion.
Fantastic. We've had a question pop up. In validating the data and identifying anomalies, is the data also validated against publicly available information? So I'm trying to think what publicly available information could be. I mean, it could be referring to publicly uh, published annual financial statements or public CBCR disclosures. I think the key thing is that,
Can I jump in, Chris?
Michael, maybe you jump in.
Yeah, thank you. I mean, it depends what the focus is on how we're going to address this going forward. So what we've done in the past with the Fluid team is look to validate, and Fluid's got some really good processes to validate, using AI to validate against financial statements and validate other information in the data systems. In terms of validating what's publicly available information could include statements by a CFO. It could be a presentation given by the board. So things aren't automatically going to scan and we set up and it's going to validate it against what we aim to validate it against. But importantly, the idea is to free up time for tax and transfer pricing teams to spend time, monitoring and seeing, monitoring risks. So the key focus we've had in to date is, as Chris said, focusing on industrializing AI to build the data systems and validates the data systems to have the information all secure. But yeah, it's in terms of what other external and publicly available data is validated against, there will be more opportunities to sense check what is being stated in the public domain.
Yep. So if there are any other questions, please pop them in. But I think from my perspective on that is that obviously, like if you've got accurate and validated internal data, right, that you've been able to gather with a lot less effort and with a lot more certainty, it gives you the time to be able to analyze that data and to use it for different use cases. And so if you do perhaps have a board pack that you want to be able to, that'd be a specific perhaps piece of analysis to say, well, here is something that we've put out there. Can you see anything in our data that goes against a policy that was put out there, right? So because you've got the data available and you've got the capabilities of AI within a structured framework, that type of thing is absolutely feasible in this day and age.
And I think it makes a lot of sense because it takes away from the menial, very previously manual driven, Excel driven, error prone spreadsheets that we've been talking about. But the aim to do is to free up the teams to then focus on the more value adding activities. So interrogating your transfer pricing model, looking at potential weak spots, looking at potential areas that might open you up for potential controversy, or ways that you can make the operations more efficient. So it definitely, as we've been talking about it throughout the session, you should really see it as an accelerator and as a means to obtain certain efficiencies in the business. Whilst doing that, it will then allow you to then focus on the more value adding activities to see how you can better operationalize the business and the structures.
Fantastic. Good. Well, look, we've got 5 minutes left. We haven't had any other questions popped in, so I think it's probably a good time to wrap up. Our goal is to save tax professionals time. So there we go. We've saved you 5 minutes. Maybe you can grab a coffee. So please join us for episode 2, where we'll go deeper into the operating model and how organizations can move from scattered data, manual processes, towards a far more structured transfer pricing capability. We'll also follow up, send you some follow-up emails with details of our TP Ops Model Accelerator, and be in touch with anyone that has requested an interaction. So thanks everyone for joining us. Thanks again to Michael and April. I've really enjoyed our discussion, and I hope you all enjoy the rest of your day. Cheers.
Thanks, Chris. Thanks, April. Thanks,
Very
everyone.
much.